So the markets are going wild after Trump's announcement of the 90-day pause on most tariffs. U.S. stock market is up about 7-8% today. International markets are up 5-6%. And what triggered this was this post here from Trump, which, in summary, raises tariffs on China to 125%. He indicated that 75 countries have come to the table to negotiate as a result of the reciprocal tariffs. And then there will be a 90-day pause on the initially proposed reciprocal tariffs while keeping, I believe, the bare minimum 10% in place. The market obviously felt some sort of relief after this announcement because stock market shot up immediately following that post. Funny enough, this morning, Trump posted this, which gave us a little clue, I guess, on what was to come. Of course, we couldn't have known that ahead of time. There are two big things I want to touch on here real quick. Number one, this is why you don't panic sell. So just this morning, it was feeling grim. Markets were down close to 15 to 17% year to date. Goldman actually just like an hour or two before this announcement had said that they estimate a 65% probability of a recession, which they then lowered to 45% following the announcement. And people were just terrified. And still are. Granted, there's just a little temporary relief. But with as bad as things were feeling, with a single post, a policy change, I guess you could say, the market reverses and shoots up 8% in a single day. Had you sold yesterday or the day before and waited till things felt better, you would have missed that huge recovery opportunity. Now, I'm not saying that the volatility is over. I think things will continue to be volatile. Things are still tumultuous with China. We're probably headed for a war in the Middle East sometime soon. So I think the next several months and years will probably continue to be volatile, but that's where you either make or break your investment portfolio. Things can turn in either direction on a dime. And as I said in my last video, when markets turn, particularly during a recovery period, it happens quickly and unexpectedly. So this happened following the 2008 crash in 2009. While the future of the financial system looked very grim, rightfully so, the stock market experienced one of the best 6 months in stock market history. We saw that again in April of 2020 when the whole country, the whole economy was shut down. The stock market experienced one of the best 3 months in stock market history, neither of which anybody expected. Had you sold at the bottom, you would have missed a historical recovery that you could never get back. And you would have basically extended your recovery period so that the time that it took to get back to where you started from just a few months to years, maybe even longer, depending on when you got back in. Now, again, I think more volatility is yet to come. But if we wait to get back in, or if we try to get out until things feel better, again, you often miss your chance at a recovery because the market often turns before things feel better emotionally. And we just can't predict when that's going to happen. Point number two is a little more political. So when this idea of reciprocal tariffs was announced, it was positioned as a way to bring back manufacturing to and to increase the country's revenues. So to create this golden age of America. Now, with these tariffs on pause and 75 countries coming to negotiate, it poses the question, was this intended to be a permanent policy or just a way to get countries to come to the table to reduce tariffs or trade barriers? So if that was the goal, if it was just for negotiating purposes, then that doesn't accomplish the proposed objective of bringing back manufacturing. So is the goal to bring back manufacturing, or is the goal to get more free trade globally? And I don't really know. And I think that's yet to be seen, which is why I don't think the volatility is done. We never know how other countries are going to react, or how the administration, what the policy will be moving forward. We're still in a heated trade war with China. The U.S. obviously imports a lot of goods from China. So I think higher prices here, at least temporarily, are still going to be something to contend with. I don't expect companies to make any big moves until we see how things pan out on the tariff front. And I would still expect companies to raise prices somewhat preemptively. So look, it's a day of temporary relief. Obviously, it feels good to see stocks go up like this, but it doesn't really change anything. Same as when it went down. Building wealth isn't about avoiding downturns. It's about sticking with the plan regardless of downturns. So enjoy the moment, but keep a long-term perspective, keep saving, keep investing, and stick with a long-term plan.